Hi folks, welcome to another edition of Home Open. Each week we talk to different professionals in the real estate industry to give you the information and facts you need to make a wise choice if you're thinking about maybe going out and buying a new home, selling your existing home, or maybe thinking about investing in a home. Today we have one of our regulars, a good friend of mine, the top mortgage broker in the Valley, the president of Magellan Capital Mortgage, Clint Schnorr.
Thank you very much, John. Great introduction. It's a pleasure to be back on the show again and kind of give everybody an update on what's happening in the housing and mortgage market and see if we can't educate them on what they need to do to take advantage of the opportunity right now.
Now, last time you were on, Clint, you talked a little bit about all the different loan programs that are available for first-time home buyers. We've sworn in a brand new president. Seems like the consumer confidence is on the rise. How do you feel? Is now the time, if you've been holding off buying a home, maybe to be thinking about going out buying a home? And if so, why?
You know, I really do. I think it's a great opportunity. Just since the beginning of the year and the change of a new year, we've seen a big upturn in mortgage applications. People are gaining that confidence back. And I think that's a smart decision for people to start becoming confident in what's happening in our industry and in the economy as a whole. Yeah, there are still going to be some bad news coming out and some things that aren't particularly tasteful that may not comfort you very well, but there are some great opportunities. One thing that I think people need to be aware of is there's a huge push from the new administration that's coming in, as well as Congress right now, to start to have some of the bailout measures help us, the people that actually own homes, are looking at buying homes and looking at investing in real estate. So it's a great opportunity to take advantage of some of those programs. And I think we'll see even more things happen in the next couple months as the new administration pushes some of their stimulus plans through Congress, and we see some of that stuff change what's happened to our economy and hopefully start to improve our economy.
I read an article recently that so many of the mortgage companies were having a tough time. They laid people off, keep the doors open.
Yeah.
And now there's so many people wanting to refinance their homes that some of these bigger companies aren't even answering their phone because they just can't take the business because they don't have the staff to take care of the people.
Yeah. That's been really interesting. We've seen that a lot in the last month. Obviously, in the mortgage business, it's one of those businesses that kind of ebbs and flows with volume. And so when volume decreases significantly, which it's done over the last year, companies lay off employees. It's a smart business decision. It's something they need to do. But as we saw in late December, interest rates dropped significantly. I was talking to one of our companies, and they received 1,200 files in one day to underwrite, where maybe on a normal basis they see anywhere from 200 to 300. And so they're staffed to handle that on a daily basis, and now they have 3 to 4 to 5 times their volume coming in every single day, and they have to retool, get more people hired again so they can. And kind of one thing that we look is what's considered an underwriting turn time. And what that is the amount of time it takes from when we submit a loan to a company to when they have an underwriting response on that. Some of those companies were down to as little as 4 hours on any given day, but probably average more in the 24-hour time frame. Now we're out to 15 business days on some of those companies. So that obviously the refinances have had a large impact on that. But also one thing that they've noted and told us as well is they are seeing a lot of purchase money business. So people out there buying homes again, getting back into the marketplace, that's impacted that turn time. So that's all good information. What good can come of that? Well, obviously these companies will start to restaff. They'll be wanting to reduce their turnaround time so that people can take advantage of the opportunities that are out there. And as they do that, interest rates will continue to stay low, and hopefully that'll spur the economy on and spur the housing industry on as well.
I was really surprised. I was with a young couple that came in and did a loan application, and with the interest rates as low as they are, just to kind of give you, for instance, on a $135,000 home with just a very low down payment, with the amount to pay back the loan, the principal and interest, plus reserves for taxes and insurance and mortgage insurance, their total payment was only $860 a month. $860 a month total payment on a home over $130,000. That's unheard of.
It is. Rates are very good, and that, obviously the thing that we can control in the mortgage business is the interest rate. And, of course, a part of that is, what interest rates we quote you change on a daily basis, and they're controlled by what Wall Street trades interest rates at. So when we see them this low, it obviously significantly reduces people's monthly payments, principal and interest on the loan or the debt repayment, and that obviously will increase the amount of home they can afford or actually make home ownership affordable for them. So it's a great thing to take advantage of, and we are seeing those monthly payments be as low as they've ever been before.
Well, the nice thing is that we're seeing is for the first time in 10, 15 years, you can actually buy a home for less per month or maybe even what you're paying in rent.
Yeah, absolutely. And the great thing about that is rent is something that you pay to benefit somebody else, the person that actually owns that home. It doesn't do you any good at all, other than you have a place to live and shelter over your head. But if we can take that scenario, the rent that you pay right now, and put you into a situation where you're able to afford owning a home, you get all of the benefits that your landlord has, which is really good for you. You gain equity in the home.
And let's talk about that. Every time you make a payment, you're paying down the mortgage. So whether the home goes up in value or not, you're actually saving money every single month. Now, on a typical mortgage, you'll probably pay off about 1% of the mortgage each year. So that's a guaranteed, 1%. If you have 3% down, that 1% that you save gives you about, let's say you save, you have 3% on $100,000, that would be $3,000. And if that 1% saves you $1,200 a year, you're going to have over a 33% return on your investment in that property just by paying down the mortgage. Now, that's not, that's guaranteed. That's going to work.
That will
And these
work,
are some of the things you need to know, how good an investment real estate can be for the homeowner. Also, if you're single, you're probably paying some of the highest tax rates. And like you said, just like the investor, the homeowner gets the same tax advantages. You get to write off all the interest. You get to write off the property taxes that you pay, and that can be a sizable saving. We've seen some of our clients save between $100 and $200 a month on their taxes by buying a home. So under the same scenario, if you're only saving $100 a month in taxes, that's $1,200 a year. If it costs you $3,000 to get into a home, that's another 33% return on your investment.
Exactly.
And that's going to happen right now, whether the home goes up in value or not.
Right. And to be able to lock in that low interest rate, this is an investment for the long haul. I mean, being able to have a really low interest rate is a benefit that you can use throughout life. Whether you choose to keep this home and live on it until you pass away or whatever, something changes in your life, but as you go forward, you can also use that to start building an investment portfolio. This could be your stepping stone into creating some income based off of investments.
And people are always saying, well, do you think home prices will go up again to where they were? Our research indicates that if home prices just go back up to where they were January of last year, so not back in the highs of 2005 or 2006, but if they just go back to where they were this time last year, and last year was the worst year for real estate since the Great Depression, you'd see homes in our area go up $25,000 to $30,000.
Right.
So do I feel that homes could go up? Yes, I definitely think. And they wouldn't have to go back up to where they were to make a substantial profit by buying a home.
Yeah, and I think what people need to understand is obviously, bad things have happened in the past in our economy. We've been through other recessions, the Great Depression, smaller housing recessions than this. And in all of those circumstances, yes, real estate has turned around. It's increased in value. It's taking varying lengths of times during all of those circumstances for that to happen, but a recovery happens. So it's never a bad thing to start looking at real estate now. I think you're seeing great bargains if you're looking and saying, I could buy a home right now at the same price that I could have paid in 2005. Now, obviously, if you looked at the 2005 to 2006 scenario, there's huge increases in value during that time frame.
Home prices are going up 15 to 30% a year.
Right, and that's, of course, extraordinary and maybe not to be expected. But if you just look at normal appreciation that we saw in years leading up to 2005, 4, 5, 6% per year is not unrealistic. I mean, those are great increases in value and equity that you could have in that home.
And this is why I've been making the appeal. If you're a grandparent, talk to your grandkids about, going out and buying a home. If you're a parent, take the time to sit down and explain to them the benefits of buying property and encourage them to come in and meet with a mortgage broker, see what they qualify for. I'll tell you a real true life story. We had grandparents come in and they had a 20-year-old son that had no credit, and so they wanted to come in and co-sign.
Right.
And they were going to even help with the down payment. And we worked two scenarios. One scenario was that the son would go in, get an FHA loan that'd help him with a 3% down payment and closing costs, or they would buy it as an investment property and let the son rent the property back. And in that scenario, they would have to put about 20% down and pay about a 1.5% higher rate.
Right.
So we figured one analysis with 3% down, a 5% rate, another analysis with 20% down and a 6.5% rate. And grandparents, by doing that, it cut the monthly payment not quite $100 a month. So they were asking, would this be a good investment for us? Well, I said, well, if your son would just pay you, your grandson would just pay you what his normal house payment would be,
right,
and you would make that $1,200 a year, and if you divide that by your 20% down, it gave them about a 3.5% return on their investment. Now, 3.5% doesn't sound like very much.
No, but it's very comparable to what banks are paying on CDs or money market funds right now, and even probably more than that in a lot of scenarios.
So, and that wasn't a bad return. And then when we talked to them about the equity buildup that's guaranteed, whether the home prices go up or not, that was an additional 1%. So now the grandparents with their big investment are making a 4.5% return. Now we're getting up returns equal to what maybe a mutual fund might be paying right now,
right,
if
yeah,
they're lucky.
Right, and that doesn't even take into consideration the tax benefits of having that as well.
And when we took that into account, it made their return 10% on their 20% investment, and that was whether the home went up or not.
Right.
So here's a way you know that if you have some money left in your securities account and you want to help the grandkids, you can help them and make a pretty decent return all at the same time. In fact, to show you how important that 10% return is, if you're like me and most Americans, if you look at where your retirement account was this time last year, it's down by about half. Now, the stock market, if it went up 10% a year for 10 years, you would have back the actual money you
right,
lost.
Yeah.
And so, I don't know how good a bet that is.
I don't know. That's, some life insurance companies used to use that as a number, but obviously they've changed that now looking at current circumstances. And
here is an example where they could take that same amount of money, have their grandson be the renter, pay no more than what he would pay if he was just buying the home himself, taking the tax advantages, taking the equity built up, and making a 10% return. And to me, I feel that's a little bit safer bet for most people.
Yeah, I think so too. That's kind of a guaranteed, fixed source of return there. So that is a great opportunity to do that.
Now, I hear all the time, primarily from younger people, they say, yeah, I hear the interest rates are down, but I hear you have to have perfect credit. And I think that's a real misnomer,
yeah,
isn't it?
I think it is. Obviously, like in the example you just talked about, the son or grandson didn't have any credit. They're still financing for people that do not have any credit. FHA loans are readily available. That's a government-backed program that allows somebody to come in who either has no credit or very little established credit and still be able to gain financing for a home. That applies as well for veterans as well. and under the USDA-RD Rural Development Program.
So
All of
there's
those-
three loan programs.
There's three loan programs that provide minimal down payments.
In fact, the rural development and the VA, that's nothing.
Yeah, that's no down payment at all. And so those programs are all available that allow somebody that has little down payment, even low income, or it doesn't really matter what your income is per se, to be able to qualify for a home and to be able to utilize the interest rates that are out there right now and start establishing credit. That's always the hardest thing for people to do. These mortgages are all opportunities for somebody with no credit to start establishing the best trade line that you can have on your credit report, which is a mortgage. And as long as you can make those payments on a monthly basis, it's going to have the best impact on your credit score.
And there's still a lot of programs like the HUD repo program where the government will pay your closing costs.
Mm-hmm.
In fact, they only require $100 down for owner occupants.
Right.
And it's not quite zero, but $100 isn't that much for a down payment.
That's true.
And on the FHA program, mom and dad can help with the down payment.
Yeah,
still.
mom and dad can help with the down payment. There's still grant programs available provided by the government. Even grandma and grandpa can. Pretty much any relative can help with those down payments on FHA loans. So.
And the other nice thing, if you find a home in the $130,000 to $150,000 price range, and if you go FHA, with closing costs and down, you're probably going to need around $7,500. Mm-hmm. Well, there's some really good news out that runs through July of 2009. Now, it's only till July of 2009.
Right.
And that is the government will give you a tax credit. When you file your tax return, they'll send you $7,500.
Right.
So that's pretty well going to cover your down payment and closing costs. It's a zero interest loan right now that you pay back over 15 years. To me, that's almost like free money.
Yeah, and what people need to understand with that is that's not a new monthly payment for you. That $7,500 is going to be paid back over time based on your taxable income. And so when you file your taxes every April, that's when that $7,500 is going to be collected back to the government. It's not something that you're going to have to write out on a monthly basis. And so that's a great tool and a great resource. I think it'll be real interesting to see with the new administration and if they go ahead and extend that tax credit beyond July of this year.
Well, I was talking to the directors of the Idaho Association of Realtors and the Ada County Association of Realtors. It's a very, very strong lobbying group for home ownership. And one of their key incentives for this legislative season is not only to extend it, but to make that $7,500 tax credit so that you don't have to repay it.
That would
so
be great.
There's a very good chance if you use this one program, you may not have to pay it back. But the way it stands right now, you would, but no interest over 15 years.
Yes, whenever you can borrow somebody else's money at no interest, that's a great opportunity to use.
And I should bring up, a fix-up. Even if the market doesn't go up, right now there's some homes that you can go out, buy for little or nothing down, have the seller pay your closing costs, and you can make that a project and go in and do certain home repairs that you would probably enjoy doing. Some painting, maybe recarpeting, getting the lawn back up into shape. One of my favorites is to take texture, paint a garage, make it look like finished space. And those are things that will automatically bring it up in today's market, whether the market as a whole appreciates.
Yeah.
And so your home can kind of be a hobby for a lot of people. And there are ways to make wealth in real estate, whether the market goes up as a whole or not.
And there's still financing available if it's even a bigger project that you need to fix up, where it's not necessarily so much of your own labor that you're going to put into it, but maybe it needs new carpet, it needs significant updates in the kitchen, it needs a new roof on it or something like that. We can actually finance the cost of that project in a mortgage for you. So
Now, are you talking about the FHA 203K program?
program is a great program to be able
So
to use
that
for
allows
that.
you to get an FHA loan for the purchase price and the money you need, like you said, to fix it, up to $35,000 if you need it. And what they'll do is they'll appraise the home as to what it might be worth after these repairs are made.
Yes.
So you're not going to be over improving the property. They're not going to let you do that.
We wouldn't let you do that, but we would let you, take a look at what's the cost of the repairs, how much is it going to take to get this house up to, really good marketable shape. And at that point, if we got it to that point, do the costs exceed what the actual value would be at that point? And if that's the case, then no, we're not going to let you do it. But there are still great opportunities, and you will find homes out there that the cost is going to be less than what actual value will be afterwards. And that's a great opportunity to build some instant equity into a home.
Well, I can tell you that just under the HUD repossessed home or the HUD acquired home program, besides the normal homes that come out every week that are bid on by homeowners, they have some that don't sell. They do significant price reduction, and then they even have one that's called Best Buy. And many of these homes are anywhere from 30 to 50% less than what the government originally brought them out. And that's why they came up with this fix-up program. Those are homes that have an appraisal in today's market that you can pick up 30 to 50% less, do this 203K program, and probably get back that extra equity that you pick up.
Right.
So this is a marvelous program. So to kind of recap, we have interest rates low, we have home prices low, we've got VA, we have rural development, we have Boise neighborhood housing that all requires 0 down,
Right.
FHA that only
Just
requires
3%
3% down.
And then the typical conventional loans that require at least 5% down on the transaction.
So, if you're worried about not having a down payment, there are various loans.
Yeah.
If you have a good broker that's working for you, on many cases, you can get the seller to pay your closing costs.
That's absolutely
So
right. It's definitely
you
a
really
buyer's
don't have
market.
any of those arguments left not to buy a home.
No. And you really, you've got to look at those opportunities and make a decision now that this is something you need to take advantage of. The problem with a lot of these downturns in the housing market and prices is a lot of times they change very quickly. That holds true also for interest rates. Interest rates change on a daily basis, and they can go up and down very, very quickly. Right now we're seeing an unprecedented lows. I would like to say, and I feel pretty comfortable saying, that they will continue for the short amount of time, but those opportunities go away at some point. And so, being able to jump on that opportunity and make it benefit you right now is very important.
And one of the nice things that a lot of our listeners probably don't know, if you go out and you shop and you find the home that you want to buy, you can actually lock in the interest rate.
That's
then.
correct. Yeah, once you've selected that property, made an offer on it, we're able to lock that interest rate in to guarantee that through the closing of the home.
Since we're talking a little bit about that, what happens if they go ahead and lock in the rate and it goes down further? Do they still have to pay the higher rate?
Locking in a rate is a commitment to accept that. So you have to kind of, make a judgment call. And we as mortgage professionals will try and help you do that, or counsel you into as to ways that you can kind of make it sure that it's comfortable for you. We look at the market every single day, and knowing what interest rates are doing, and we can kind of look at what trends are. And so hopefully, your mortgage professional will be able to educate you well to make a good decision about buying a home. Once you've committed to an interest rate, yes, you need to probably carry through with that rate commitment. Now, there are times
But
when
you probably
interest
wouldn't
rates-
lock it in unless it was like the very best rate in the market.
Yeah, I mean, given the time frame that you need to close in, and looking at the circumstances, it will help you make an educated decision on locking that rate in. Now, there are times that if interest rates drop significantly, all the companies, for the most part out there, have a renegotiation policy. Those vary depending on how significantly the interest rates improve. Typically, if they improve more than 1/4 to 0.5%, then they're going to allow you to renegotiate to take advantage of those lower interest rates. And so, that's something that your mortgage professional needs to help you be educated on, what the options are available if those interest rates do drop, and how to take advantage of the lower interest rates if that happens.
Well, I would kind of guess where it's the lowest interest rates that I've seen in my career, that they're going to go in any direction. They'll probably go up.
Right, yeah, and it happens fast. To give you kind of an example, right before Christmas was the lowest I've ever seen interest rates before in my life. We actually had a window that we hit 4.5% on a 30-year fixed. Now that's unprecedented, but I'll explain that window. That window lasted for 2 hours.
Really? So you had to be ready to lock in your loan
Happened
in
at
2
8
hours.
o'clock in the morning, ended at 10 o'clock in the morning, and interest rates went up after 10 o'clock in the morning. Interest rates are kind of like stocks. They trade on Wall Street all day long, and they move up and down all day long. And so, those opportunities can come fast. Now, obviously, rates have stayed real close to that level. They haven't been quite down to that 4.5 again, but they stayed sustainably low since that period, and I think that'll continue to happen. But yeah, obviously for a home buyer or somebody looking at a home, that may not be an opportunity they're able to capitalize on. Rates are still good. They're still great rates to lock into and to be able to take advantage of that. For people refinancing, if you haven't already started the application, started the process with a mortgage professional, it's likely that you will not be able to take advantage of that opportunity. One, because you won't know that the opportunity even exists, because it's, unless you're in the business and watching it on a daily basis, you don't know that that happens. You usually hear about it a week later when it hits the news or something like that. And number two, if you're not qualified and don't know your situation, it may not do you any good to even lock the interest rate in. And so, you need to be there. You need to have your application in to be able to take advantage of the situation, for sure.
You bring up a really good point on that too. And if you currently have a home with an FHA or VA mortgage, and it's above, let's say 5.5%, you should be contacting a mortgage broker or banker about doing what's called a rate reduction. It lowers your monthly payment, it lowers your interest rate without having to go through the whole refinance process.
It is. It eliminates the appraisal and the qualifying portions of that, and so it makes it very easy to reduce that interest rate.
And you have very minimal closing costs, where if you go out and do a whole refinance, it could cost you anywhere from 1.5% to 3% of the outstanding loan balance.
That's correct.
Where a rate reduction many times can be done for maybe $500, and it pays for itself in just a few months. Mm-hmm. So if you have one of those types of loans, know that this is one of the benefits of having those loans, that when rates do go down for very low cost, you can go and do a rate reduction.
You got it. You're able to capitalize on where it is for very low.
Now, just quickly, if you're an investor, we kind of did a little scenario of $135,000 that you put 20% down, and it made the payment around $860 a month. People right now, if you want to invest in real estate, there is money available.
There definitely is, yeah. A lot of people think that the financing is gone. It is there, it's in place, and it's good financing, good quality interest rates, good quality loans, no prepayment penalties or anything like that.
Not interest only. These aren't your payment option. These are your standard principal and interest, pay down the mortgage each month type loans.
You got it, yeah.
And for the first time in, I'd say, probably 15 years or more, investors can go out and buy property, and with these lower interest rates, you're going to find that your monthly payment is equal to or less than the rent that you're going to get for these homes.
You got it.
So you're still going to have the equity buildup, you're still going to have the tax savings, but you're going to find yourself probably making money on these investments.
Yeah, and I think we need to wrap up now, John, but what people should understand from this and our conversation today is it's an unprecedented opportunity to either buy real estate as your primary residence or invest in real estate right now. It's a great time to get out in the market. If you want more information, you can contact me at Magellan Capital Management and John at Realty Center anytime. We'd be more than willing to help you out and give you some more information about what's happening in the real estate and mortgage industry.
Clint Schnorr, President of Magellan Capital, thank you so much for being a guest on Home Open today.
Thanks, John.
Thanks.